Thank you, Alex and Holus Global. We really appreciate it. I'm going to go ahead and introduce our next moderator. You've seen him before, Natan Ponieman, head of Psychedelics content at Benzinga. Come on up, Natan. Natan will introduce our panelists and give you a little sampling of our subject matter.
Don't be shy.
Don't be shy, Natan says. Come on up, everybody.
Well, exciting panel for me. These people know so much about psychedelics investment that they really make my job really easy. I just have to go play and they just start saying interesting stuff. So as a moderator, that's the dream job. Okay. So this is the Psychedelics investment panel. We wanted to get a voice from the private side of the space because we hear so much about companies, but there is so much going on with private companies in the psychedelic space. The numbers are not quite accurate. 60 with mic. Okay. Okay, great. So as I was saying, there are probably about 50 or 60 public companies in the psychedelic space between Canadian exchanges and major US exchanges, but the numbers are like 10 times higher for private companies in the space. And there is so much going on. There's such a rich environment of companies doing very different things across the entire value chain. But since private companies are private, they don't get as much exposure. So we thought this would be a good opportunity to introduce some of the stuff that's going on in the private side of the space and contrast it with the public side of the space, and just try to get everyone here understanding what's the best investment strategy for a diversified portfolio within the psychedelic space. So without further ado, let's introduce our panelists. I'll just let you guys introduce yourselves. You'll probably do it better than me. So this man needs no introduction, but please, if you want to tell us a little bit about yourself and your involvement in the space, go ahead.
Thank you. I'm Kevin O'Leary. I'm a investor. I invest in companies and I have that I think have a great story to tell. And our nascent new sector is very interesting to me. And I also have come to the conclusion, particularly in the psychedelic space, that there's a direct correlation between market capitalization and the ability for the company to tap social media, the media itself, traditional cable, et cetera, because a lot of people are interested in this sector, but don't understand how it works or how it's going to work or what stage we're at. And so I try and invest in the companies that are able to generate a voice. The meme stocks, you've seen what's happened to those, but in the psychedelic space, Reddit's very important, Robinhood's important, CNBC's important, they're all important. My job for these companies is to help them tell that story and disclose, of course, I'm an investor, which I am.
Dustin Robinson, you guys might not know me quite as well as Kevin over here. I'm the managing principal of Iter Investments. We're a VC fund that invests in early stage psychedelic companies. Currently have 16 companies in our portfolio and looking to build that to about 22 to 25 companies in this first fund. I'm also a lawyer and a CPA, so I actually have a law firm as well that represents various psychedelic companies. And I also founded a nonprofit in 2019 called Mr. Psychedelic Law that's focused on legal reform around psychedelic medicine. So the nonprofit is very involved on a lot of stuff at a city and state level.
Cody, Shandraw, managing partner of Ambria Capital. We currently have 37 investments in the psychedelic space, everything from companies working on technology, drug development, clinics, so a little bit of everything.
Tim Schlidt, partner and co-founder at Palo Santo. We're a fund focused primarily on the biomedical applications of psychedelic compounds. Our backgrounds have largely been in biotech, healthcare services investing, which I think that background has lent itself well as the space seems to head in a much more healthcare-oriented direction rather than recreational, as was seen in cannabis. Have a great team of scientific advisors who've been researching this mechanism of action for decades, like Chuck Nichols, John McCorvey, Julie Holland. And we're a $45 million fund to date. I think that'll be a little bit larger as we close up our fundraise this quarter. We've deployed $23 million into the space so far across 28 portfolio companies. So it's certainly been quite active in the ecosystem.
Hi, I'm Lindsay Hoover, co-founder and managing partner at JLS Fund. We invest in the catalytic potential of psychedelics to transform the mental health landscape. So that's drug development, it's delivery technologies, it's all the supporting tools and infrastructure, as well as consumer-facing products and services. So we believe that psychedelics really have the potential to change the mental health treatment, diagnostic and treatment landscape. And we've invested in 10 companies, everything from drug development to gamified VR meditation and more. So we're very excited about the advent of this new sector and the potential to transform human experience.
Thank you. So, as a journalist covering the space, first I was covering cannabis, then I switched over to psychedelics. And one of the reasons I love speaking to VC investors is because they have such a unique view of the entire market, because they're speaking to, they're reading decks all the time, they're doing their due diligence, they're speaking to companies all the time from the entire spectrum of the sector. So they're really able to share unique insights into investing. I'd like to do like a little exercise. If we can do a little show of hands, how many of you here perceive yourselves as most of a cannabis person, and how many of you perceive as more of a psychedelics person, or maybe neither? So for cannabis, you self-perceive as more of cannabis than psychedelics? Please raise your hands. Okay. So quite a bit. And how many of you feel that you're more in psychedelics than cannabis? Okay, so around half and half. And naive investors just coming to take a look at the space, not really involved in anything. Are there any of you? Okay, good. One. So taking that into account, maybe we can do a kind of transition between cannabis and psychedelics, trying to get a lay of the land on how to switch or maybe, add psychedelics companies into your portfolios as cannabis investors. So I'm going to just throw this question out there and see who wants to take it. But what do you think are the main differences between investing in cannabis than investing in psychedelics? Anybody want to go?
Well, I think one of the main differences is that psychedelics taking a medicalized route to market, which means there's regulatory oversight, and there's a path that investors understand. They understand the risk at each step in that path, and they also understand what the potential rewards can be. And no one is being disintermediated from this ecosystem. Everyone that plays a part in both the financial and operational development in biotech kind of understands their role in this ecosystem. And I think it gives people comfort to know that, number one, you're not sort of necessarily facing down a fractured regulatory system, but you also understand what is the ultimate exit. That's going to be public markets, that's going to be strategic buyers in many cases. Drug development at the early stages has a very well-worn path of partnering with big pharma and often being acquired. And I think that was a really smart way for the industry to advance, because it gives investors a lot more certainty and an understanding of how their investments are going to be ultimately monetized.
Very nice. So what does the psychedelic value chain look like? Because there are so many opportunities beyond just drug development, which is where most of the capital is invested. But the psychedelics value chain, as an up-and-running market, eventually is going to include a lot more companies and subsectors than just drug development. So again, who wants to take this?
I could take it. Our fund basically kind of looks, we invest across the full value chain, and we basically bucket it into 4 buckets. The first is the suppliers of the active pharmaceutical ingredients. Companies like Cygen out of Canada, they're actually here today, that we've invested in. The second bucket is drug development and drug discovery. So, the drug production companies are supplying those compounds to the drug discovery and drug development companies. Third bucket is really the clinics that will be delivering this medicine. Currently, through drug development, these compounds are being approved under what's called REMS, Risk Evaluation Mitigation Strategy, that actually requires them to be delivered at clinics, which is a complete paradigm shift to the way current pharmaceuticals are delivered in mental and behavioral health. So that's the third bucket. And then the fourth is kind of the catch-all bucket, where we have the supporting technology and infrastructure that will be required to support those other three buckets. So that's how we kind of see the full value chain.
Wonderful. So I'm going to jump to Tim for this one. There are definitely some important catalysts that are coming within the next few years that are going to make a difference in the valuations of psychedelics companies. But which of these buckets do you think within the value chain are going to be the first ones to start producing revenue?
I mean, I think primarily clinics, they may generate revenue. I don't know if they'll generate profit. That's a good question. So kind of the dirty little secret in the space is clinics don't make a ton of money. But I mean, certainly those will be kind of the primary revenue generators, I'd say. But I think the big show here will certainly be biotech. And maybe, a message that will resonate with the cannabis crowd to a degree is some of the largest exits in cannabis were around cannabinoid biotech. I mean, you had GW Pharma, $7.2 billion acquisition by Jazz Pharmaceuticals. Arena Pharmaceuticals was acquired by Pfizer, largely for their cannabinoid portfolio. That was a $6.7 billion acquisition. So even when you're not generating revenue, you can certainly see exits in biotech, usually phase 2 of development. Once you get a readout there, that's a big catalyst to get acquired or go public as well. And we'll hit on kind of the public market dynamics in a little bit. So even in the absence of revenue, there certainly is a pathway to exit. But I guess, revenue generators would be, clinics, certainly tech to a degree. But a lot of these do kind of have exposure to biotech. And so you're not going to really see those take off until you see drugs commercialized anyway. So it'll probably be a slow trickle. And then kind of the fire hose opens once a number of these products start commercializing. And first major event will be probably 2025, when COMP360 most likely hits the market.
Okay, but how about the MDMA program being developed by MAPS? Kevin, do you think this will be a major catalyst when that goes, gets FDA approved?
Yeah, I think a lot will happen when that occurs. I want to just go back to a comment earlier regarding the comparison between the cannabis market and the psychedelic market from the investment side of it. Cannabis is a commodity. It's not good, it's not bad, it's just a commodity. So it's very hard to create any kind of a moat around a patentable drug or version, a delivery version of it. And so in commodities, in any commodity, margins get crushed as scale's achieved. And that's exactly what's happened to the cannabis industry. But it's going to get worse because a lot of this was built out in Arctic climates, which seems foolish to grow something in a frozen wasteland like Canada, when you can basically grow 5 crops near the equator. So it's only a matter of time before that occurs, making it even harder to justify a lot of these investments in hydroponics and everything else. So I look at it as again, as when you're trying to index for institutions, which is what I do, it's the classic Wayne Gretzky story. Where's the puck going? And to the extent that they're allowed to invest in something, they're not allowed to invest yet in cannabis for reasons I think most people understand about the Schedule of narcotic. The puck is going to psychedelics, which are protectable and patentable, and where science and medicine merge and create drugs that have tremendous economic value should they solve for opioid addiction or alcoholism or anxiety or any of these. And that's why when you hear from these investors, they're making multiple bets. And I think, when I compare these two, it's so interesting. We did a conference with both of these because they're the antithesis of each other. Yeah. I see capital leaving cannabis, and I see it going to psychedelics because the potential is so much stronger there. And at least for me, an indexer, I can invest in it. I can actually weight how much I should own of MindMed, how much should I own of an Atai, how much of a Compass, based on the public data of how many trials they have and where I feel more confident or less. That's a mature market and one with more potential. So I would say in the next 24 months, this is going to be psychedelics will be a far more interesting place for institutional capital.
And just to add to what Kevin's saying, I think it's important for the investors to really understand very clearly that one of the key distinctions here from an investment perspective is that when you're investing in cannabis, it's still federally illegal. So that kind of keeps out a lot of different investors that can't invest into something that's federally illegal. What all of us are investing in, I'm pretty sure, are companies that are actually going through the proper federal pathways here in the US. It's the FDA, Canada, it's Health Canada, and so on and so forth. So if you're investing in the psychedelic space, you're actually investing into companies that are doing this the legal way. It's an important distinction between cannabis and psychedelics. And I think the other key distinction is that, and we're all kind of saying this, is cannabis, in my opinion, is mainly, when all the dust settles, it's mainly a CPG play. I think 90% of the market will be CPG. I think all of us on this stage agree that the vast majority of the market on the psychedelic side, when all the dust settles, is going to be pharmaceutical. So when you're dealing with that, it's just you're making very different investments. CBG, kind of a commodity. You're looking at EBITDA, you're looking at revenue numbers. Pharmaceutical space, you're looking more at like milestones that they're going to be achieving, whether it be, phase 1, phase 2, or phase 3 clinical trials.
And one quick thing to add to that also, just path to market. I think part of why this makes sense in a pharmaceutical context, I know biotech can put people to sleep, but from a regulatory pathway, if you take a Schedule I drug through FDA clinical trials and find efficacy, by default, it's no longer Schedule I because there's a known medical use case. So it has to get rescheduled by the DEA and then is kind of de facto federally legal, through a prescription model, but it's kind of a Trojan horse way to get to market, and I think a more effective one than kind of a patchwork of state regulations. And we've seen plenty of case studies like this, Marinol, Xyrem, Syndros. There have been plenty of drugs previously that were scheduled, taken through trials, and then got FDA approval and are now marketed products.
Yeah, for sure.
Marketed drugs, I should say.
So to sort of wrap up this section of the panel, I want to go to Cody, and maybe if you're advising, a naive investor, naive in psychedelics, who wants to build a portfolio, where would you allocate, capital to get a diversified portfolio within psychedelics? What's your take on that?
Diversification. I think it's the most important thing, especially any early industry. I think the more bets you can place across a wide spectrum of companies, your chances of succeeding are obviously much higher. So we have our portfolio very similarly divided up to Iter's. We have a lot of investments in the technology space, a lot of companies in the drug development space, a lot of companies in the clinic space. So, I really think that diversity is key, especially something early. You don't, 24 months, 36 months from now, you don't know, who's going to be left standing. I think we're already starting to see a large amount of companies talk about consolidating, and some of them are going out of business, being delisted. So it's hard to tell. We were actually talking backstage. Kevin was just making the point: the companies that are well capitalized are going to be able to weather the storm. Biotech's been in an 18-month bear market, compounded with overall macro. I think that there's probably going to be a lot of potential for some of these companies to be going out of business, or an opportunity for companies to start acquiring assets for pennies on the dollar. So, I think being spread out is probably key at this stage of the industry.
And the broader secular trend really is towards people taking agency and addressing their own mental health issues. And that goes beyond drugs, actually, to enabling tools and technologies. And there's a couple of revolutions that are happening simultaneously here. The information and data mining revolution as applied to drug development is dramatically transforming what's possible on the diagnostic and the treatment front. And some of the wearables and technology and the huge harvest that's happening from people really leveraging their quantified self and providing that data back into the ecosystem means that we're finally going to be able to accurately diagnose mental health issues and also see if the treatment really works, which really hasn't happened until now. And so there's an opportunity to invest not only in the drugs themselves and the IP around that, which I think is an important point, that when we talk about MDMA and companies going to market, when they don't have IP that's protected, there's probably going to be an interesting development, potentially somewhat unique to this sector, where substances that have been used for thousands of years may make it to market first in some of these clinical trials, but if they don't have protected IP, they might not survive in terms of high market caps. So being able to look at the broader sector and see how the technology that's enabling this is also an investable area, as are the tools such as wearables, such as sensors that are at a 22nd century level, is a really exciting way to diversify within this sector, because without mental health, there is no health. And I think that kind of tells you how big this market is.
And I think we should circle back to your question about MDMA, because it's really important. Right now, MDMA is in phase 3 clinical trials for PTSD. It's the furthest along. We expect that it'll be approved in 2023, hopefully commercialized in 2024. Our fund actually invested into SPV vehicle to help commercialize MDMA. I think that's going to be a real turning point for the industry. MAPS they're the sponsor on that phase 3 clinical trial. And they're really going to be knocking down the barriers and creating that commercial framework that the companies coming in after are really going to benefit for. So I think you really got to watch what MAPS is doing. They're really structured more as a nonprofit. They have a public benefit corp arm, but they really function as a nonprofit. But they're breaking down a lot of barriers for the industry, and I think the entire industry is going to benefit from what MAPS is doing. And really quick, their phase 3 clinical trials, their last readout was unbelievable efficacy and safety profile. Over 2/3 of the participants in their phase 3 clinical trial that had PTSD, over 2/3 of them were no longer clinically diagnosed with PTSD after going through MDMA psychedelic assisted therapy. Those numbers in the pharmaceutical space are absolutely incredible. So we have a lot of hope for what MDMA could do for veterans and many others that are suffering with PTSD.
And maybe Kevin probably knows this better than anyone, but what's helping to break down the barriers, I think, in people's minds, someone even said to me yesterday, you're investing in what? Psychedelics? You should lose that word. But when you have veterans and you have people that have intractable addiction problems, which is really pretty much mental health touches everyone on the planet, there are ways for the media and for public opinion to be rallied around this in an unprecedented manner. And you're right, Compass has played a key role in really educating the public and bringing things to market that really do affect change, and we'll all be beneficiaries of that.
One quick thing on the portfolio construction angle, because I know we've talked a lot about diversification across verticals, but even within biotech, I mean, you usually like to have an uncorrelated portfolio as well, so uncorrelated assets. And one way to achieve that in biotech is betting on different, what we call mechanisms of action. So these different drugs will hit different receptor targets in the brain. And one way to kind of decouple that is traditional psychedelics operate at the 5-HT2A receptor primarily. That's what mediates the therapeutic effect. But there are other psychedelic-like compounds like ibogaine, ketamine, where you have kappa opioid receptor activity, NMDA receptor activity. MDMA is more of a neurotransmitter releaser, so you're kind of hitting serotonin, dopamine, norepinephrine to a degree. So having a lot of different bets, even if your portfolio is more overexposed to biotech, since that's the opportunity set here, that is a way to kind of achieve uncorrelated returns.
I was going to make a comment about the challenge for the well, let's talk sovereign wealth. I mean, you think about the percentage of wealth that's investable. More than 90% of it is in sovereign and pension wealth. Of course, high net worth individuals matter and retail matters, but it represents basically nothing in terms of the large pools of capital. And so when, let's say you're running a $100 billion mandate, which is not a large sovereign fund, it's a small one, and typically these funds have very strict mandates regarding diversification. So it might be something like this. There's 11 sectors in the S&P 500. You're not allowed to have more than 20% of the fund in any one sector. And within that sector, you're not allowed to have more than 5% weighting in any one name. And so, you know, when you're running 100 billion, that means you generally move to pretty large S&P 500 companies or subsets thereof. And so in trying to, if you're the manager and you say, I like this sector, it falls into biotech or pharma, which most of, in healthcare have 20% weightings. Those are big, big, big sectors. But in trying to index this one, because I talk to these guys pretty well every day, they would love to get access to these nascent, you know, new molecules, because then they get more diversification. But their compliance department won't let them do that because it's not liquid. And so if all of a sudden their position ends up being at 6% weighting, by 4 o'clock that day, they've got to sell down 100 basis points. It has to be liquid. That's how it works. That's how the whole thing works. And so the sector requires more companies to go public on major exchanges. And that's probably not going to happen until one of these events occurs where one of these drugs becomes a medicine. Even if it's not a proprietary, you know, psilocybin or some ancient, you know, product that's never going to be proprietary, that would still help this sector. Because I look at it as an indexer and say to myself, my goodness, the amount of capital that is waiting to pursue this. I mean, it's billions and billions and billions of dollars, because each of these problems are multi-billion-dollar markets. Just alcoholism, for example, anxiety, you know, opioid addiction. These are really huge markets. And so we're in that weird place now where the money wants to go, but it can't get there. And these guys got to get these companies public real fast. That's basically it.
Yeah. Well, speaking about public companies, I guess the elephant in the room right now is what Lindsay once called market fallout. I call it more of a market correction. But if you look at any index following psychedelics, I mean, the line is straight bear. So what are some explanations that you guys have in terms of why this happened to the market? From November to basically March, there was a big downturn. What are some internal and external causes for this? Anybody who wants to take this?
You haven't really seen a negative catalyst within psychedelics. I don't think this market downturn is necessarily idiosyncratic to psychedelics. I think it's more macro driven. I mean, you've seen a really big implosion in biotech more broadly, and that's probably Fed driven in a lot of ways. I mean, financing risk is a big risk in biotech. If you can't raise your next round, you're not a going concern. It's not like you're revenue generating and you can just turn off growth and then increase margin. So you don't have that luxury here. So the S&P Biotech Index, XBI is the ticker, is down like 50% also. So I think since a lot of psychedelics has biotech exposure, you're seeing it kind of get captured more in that market route there. So I mean, XBI is down to its 2015 high. There was a brief bubble even in 2015, which is quite a correction. So I see it as more macro driven. We're talking about a trough of disillusionment in psychedelics, but when I look around the room and you read kind of what's in the press, I don't see a lot of negativity in terms of attitudes towards these molecules. I think it's a lot more market driven in my opinion. And you're kind of seeing that based on the indexes this has exposure to.
And I mean, for investors, you know, keeping a lid on valuation for those of you in the room who are investing now, and we're of course all investing in private companies, it really was a salutary effect because there's so much excitement about the potential legitimately and justifiably of these compounds and there was not a lot of supply of great companies. And what we're seeing now is a lot of traditional folks from drug development, the Pfizer people and the Biogen people, their scientists are getting involved in this. Every medical person you talk to knows about psychedelics and knows about the potential. So there's a lot of enthusiasm, and there was a little bit of a demand-supply imbalance, I think, at least when we started investing back in 2019 and 2020. The prices were relatively rational, and things got a little bit ahead of themselves. So for investors, this isn't a terrible thing. This is kind of, let's get back to basics. Let's invest in fundamental technology, protectable IP that's moated, and everything that supports that. And let these companies go public when they're ready to withstand the intense scrutiny that they're going to have and raise the kind of money that they're going to need to raise to take it to the next level.
Yeah, so there was a big trend of psychedelics companies going public in 2020, early 2021. So following up on Kevin's comment, when would you, as VC investors, think is the best time for to take a company public within, the current
When the
context?
ducks are quacking. That the whole sector happened with the majority of the capital raised is across three companies. It's Atai, it's Compass, it's MindMed. They were the vortex that sucked up about 85% of capital in the public markets, all at the same time. And they're well-funded currently. If you're indexing, those are the three, because you get such a diversity of different trials. Some are more focused on the psilocybin side, some are more on LSD and microdosing, and then there's proprietary molecules being developed at the same time. But if you're just a typical investor and you want exposure to the sector that's liquid, so you can actually modify your positions based on price, which many institutions have to do, you index those three.
Yeah.
Then you have a huge exposure to pretty well everything that's going on. And I'm not saying that these private deals aren't good, but they tend to be more around one molecule, one idea. And what will probably happen is one of those big three guys will eat that thing up if the molecule shows promise and put it in its portfolio. Or what could happen is, if the market stays very lean and mean, you're going to see those three big guys probably merge to get access to more institutional capital. You just don't know. As an investor, I don't have any inside information, but I just look at the writing on the wall. It's access to capital that's going to matter. And if you're burning $500,000 a month or $1 million a month, that $100 million is gone in 50 days. You're saying, yikes, I got to raise more dough. And how do I do that? But I agree, the promise remains the same. It's just as good as it was 2 years ago, if not better. And some of these anecdotal, information flow about some of these trials is really, really encouraging. And so I'm more on the side of LSD having tremendous potential without having the clinical side. Microdosing may be a path, nobody knows. But if there's a way for you to solve for anxiety with a microdose of something that does not make you hallucinate, that's a very attractive drug with a huge market. So we'll see.
And many of the, not to break in, but to your point, I think many of the big pharma, we know they're sniffing around the tent already. So some of these companies aren't even going to make it to the public market because they're going to be bought by huge public companies that look at the mental health market, which is everyone on the planet, and the lack of effective treatments like SSRIs that have terrible side effects and work for less than 30% of the people. And they say, I want a piece of that. So the liquidity will be there, whether it's on the public markets or whether it's in the private markets, for those who can, get to phase 2A, I think, as you said, or at least demonstrate clinical efficacy in the early stages, the very early stages, from what we can see.
And I think when we're talking about public markets, we need to make the distinction between kind of the NASDAQ, New York Stock Exchange, and then the Canadian exchanges. So yes, there's a handful of companies that have successfully listed on the NASDAQ, like the MindMeds, the Atais, the Compass Pathways, Field Trips. But there's also about 50 psychedelic companies that have gone on these Canadian exchanges. And some of you that have invested in cannabis, we've kind of seen how this played out. In many aspects, going public too quickly on these Canadian exchanges with the low volumes could actually be the death knell for some of these companies. So I think, yes, we certainly want to see liquidity in our investments. But I also think some of these companies are running to these Canadian exchanges too early. And I think timing is really important. You need to have the balance sheet to support it, and you need to be ready to announce the milestones to really support your stock price. And so that's kind of my perspective. Certainly we all want to see liquidity in our investments, but I also think there's a right time and a wrong time to go public. While the Canadian exchanges are much easier to access than the NASDAQ, they do also trade at very, very low volumes and could be very challenging for some of these early stage companies.
One note, the NEO exchange, which is one of the ones you're talking about, just went under agreement with the CBOE. So that's going to become effectively an American exchange with probably an uplisting that's easier. But they were very, very entrepreneurial and pioneering cannabis and, of course, psychedelics. They did a pretty good job for a lot of companies. MindMed started there and uplisted to NASDAQ. With the CBOE endorsement, that probably makes it easier, I would think.
think a key word here also is milestones. So in biotech, 90% of IPOs happen at phase 2 development or earlier. But the real readout where you really it's a major catalyst to go public is a phase 2 readout. So your odds of success jump to about 70% that product is going to make it through FDA clinical trials from around 25, 30% when you're in phase 1. And then if you're preclinical, it's even less than that. So there's quite a graveyard. So once you get a phase 2 readout, which usually takes about 3 to 4 years post IND, then that's usually when you tend to see companies go public in the biotech space.
Yeah. So a lot of companies that went public in Canada and in the smaller exchanges, they were taking advantage of all the public information. You could call it hype to raise a lot of capital. So how much would you say that retail investors have an incidence over the overall market? Do you think they weigh a lot, or is it more institutional investors that are shifting the balance? Anybody want to take this?
I'm not sure we understood the question.
Okay, so how much of the volume is being dragged on by retail investors, and how much is just institutional capital?
I think right now, probably more than 70% is institutional. I think because there was such a giant rush of all of these companies going public over an 18-month period, the stories kind of got lost among a lot of people. So it was hard to follow. And I mean, we've seen trading days where $200,000-$300,000 in volume brings a company down 15-20%. It's not sustainable. And again, I think that gets back to the consolidation story more than anything.
Yeah, definitely. Okay, so we have about 5 minutes left. Is there anybody who wants to ask a question? We can open it up to Q&A. And otherwise, we can just have other questions. Anybody raise your hands? There's someone in the back.
Thank you all for your time today. I really do appreciate it. As someone who is in the pharmaceutical capital of the United States, lovely New Jersey, there's a lot of rumors flowing around, but I'd like to hear from the judges, from the panelists up there. In your opinion, out of all the big pharma companies, who do you think will be first to market? And who do you think of big pharma here in the U.S. will be first?
I think Johnson & Johnson, most likely. Spravato is a ketamine product, so it would probably make natural sense that they followed on with that.
Yeah, and you see Otsuka just made a deal. Otsuka is a huge pharmaceutical company. They just made a deal with Mindset, which is a psychedelic company with about a $48 million market cap, where they licensed out a family of their molecules. They had an upfront payment of $5 million, and they're basically financing the drug development. So that was huge news for the industry. Certainly, we've already seen Johnson & Johnson developing their own product, Spravato. Otsuka was kind of the first big deal that we saw between a big pharma company and a psychedelic company. But I definitely think we're going to start seeing more of those in the future.
I'd watch Sanofi and Biogen, and just as you probably are aware, money is floating back into this sector of biotech because of the promise, and because a lot of the big drug companies have, they need a pipeline. And so the pipeline around mental health and the size of those markets and the fact that there's so much promise, we understand that not only are all those big pharma folks very closely monitoring the space, so are the larger institutions, the OrbiMeds of the world, for example, that invest in this sector for a living with, as Kevin said, lots of pension money behind them. So everyone is watching, and I think those of you in the room who are lucky enough or smart enough to look at this really hard and try to find a way to invest early at great valuations. We'd all like to have been in Google when it was private. I remember helping to value that company when it was private. So, you don't get the fruit if you don't go out on the limb. I think this is a really good time to start climbing that tree.
I think Jazz Pharma as well. I mean, they've demonstrated a willingness to take a risk on riskier compounds. They acquired Xyrem, which was GHB. That was a scheduled compound, Epidiolex. So they may still be digesting GW Pharma, but they've certainly demonstrated a willingness to take risk. And I think more broadly, the theme to look out for is companies that have hit a patent cliff. on SSRIs, you know, once you hit your patent cliff, your sales drop dramatically when a drug goes generic, and they're looking to fill that pipeline with more novel IP. So kind of anyone who falls in that bucket, I think will be acquisitive at the right point in time, but they're probably going to wait for a phase 2 readout. It may be 2-3 years till you really see them start to get active.
Cool. We have a question here.
I don't, okay. So this is working now. I don't know if we have one more.
On big pharma getting involved, what are your thoughts on big pharma's resistance to even wanting to see psychedelics as a medicine destroy some of their largest billion-dollar drugs?
The opposite. The opposite, right? I mean, they are waiting for, as we've all said here, for pipeline of new drugs to fuel their success, to fuel their pipeline, and they've all been trying to solve these problems, right, for years in different ways, but they are in no way disintermediated from this process. All the companies that are developing drugs welcome those kinds of partnerships, those kinds of milestone arrangements and royalties that are, you know, core to how pharma operates. So we all, I think, believe pharma is going to embrace this in a very big way.
And I think, you know, this is capitalism at its best. Some of these big pharma companies, they're not nimble enough to, you know, kind of do the R&D that some of these smaller companies are able to do. So we're investing in kind of the early stage biotech companies that are doing this R&D, and the big pharma companies don't need to play in that sandbox. They'll watch those companies duke it out, and then when a winner seems to appear, they'll stroke, you know, $10-20 billion check and acquire that company. So I think big pharma's approach is more sitting back and watching and seeing who the winners are, and then probably stroking a pretty large check to acquire whoever that is.
And one of the things that we offer, I think, on this panel is diversified exposure and the kind of rigorous analysis of the intellectual property that is underpinning the value of a lot of these companies, because that is a very important distinguishing element in many ways from cannabis, as I think has been mentioned before. So understanding the science, the mechanisms of action, who really has defensible IP, and what does that landscape look like, and what is the strategy to be the first to market to treat depression, or the first to market to treat anxiety, and then potentially leverage that for off-label uses. So it's a deep dive, and I think all of us really enjoy doing it, and we hope to provide to investors the ability to invest in a broad portfolio of very well diligenced companies with oversight and management of that portfolio to be able to participate in this, you know, revolution now.
Good. So let's end on that note. Thank you so much. Give it up for the panelists.
Thank you. Thank you, everyone. We really appreciate it. Lindsay, Tim, Kevin, Dustin, Cody, we really appreciate it, guys. Thank you. And Natan, wonderfully led, man. Thank you. Thanks, Kevin. Really appreciate it. Natan, thanks, man.